Looking to invest in ETFs in 2025? Here's 3 picks that are set to take off this year. Here to break it all down for us is MarketBeat Analyst Chris Markoch. Chris, there are so many ETFs out there. It feels like there's new ones coming onto the market every day. How do you narrow down which ETFs to invest in?
For many investors, it might come down to whoever their fund manager is of choice, whether that's Vanguard or Fidelity or whatever. But even once you get into a specific company, your choice of ETF is largely going to depend on what your investment goal is. So for many investors, you could invest in an ETF like the SPY ETF that tracks the S&P 500 and call it a day and say, okay, well, you know what? The performance of that's going to closely approximate the S&P 500. And this year you would have come out with a gain of around, 28%, and you're doing really well. And that's great. Some investors, however, like to use ETFs to supplement individual stocks. And so maybe they say, well, I'm really happy with the performance of my portfolio overall, but I'm hearing about a theme like AI. I really think I want to get exposure to that, but I really don't want to pick individual stocks. An ETF is a great way of getting involved in that. And as you said, there's more and more coming up almost every day. It seems like there's almost as many ETFs right now as there are individual stocks that you can choose from.
Well, you have been looking through some different ETFs out there and have 3 picks for us today that you think are going to be really successful in the new year. Let's start out with your first pick.
Okay, so my first one, it's probably the one that's got the funnest name to say. It's called the Pacer US Cash Cows 100 ETF, and the ticker symbol is COWZ, COWZ. So the thing about this ETF, Bridget, is the fund selects its holding based on a company's free cash flow yield. And so free cash flow is how much money a company has left after paying out all of their expenses, including dividends and share buybacks. And the companies in the COWZ ETF have more than double the market average FCF yield. Another reason why investors may want to get involved with this, aside from just choosing companies that have a great cash position, is that this fund specifically targets a lot of mid-cap stocks. And if you look at a lot of investing portfolios, they may cover large caps very well. Recently, a lot of investors have been very interested in small caps, but the mid-cap area, I'm talking between 2 billion and 10 billion in market cap, those aren't covered very well by most portfolios. This ETF does that. So you're getting companies that have a strong cap position, but are also in that mid-cap sector that are expected to do well in 2025.
Yeah, I think this is an interesting ETF out there because it's not like a specific industry. This could
Right.
be a company in any industry that just has this specific area of their books that's doing really, really well. What is the potential advantage for growth when you pick just companies that have such a good cash flow?
I would say you're probably going to be looking at performance that might be a little bit less than the market average because, again, the companies in the COWS ETF are not necessarily all heavy growth oriented companies. But what you're lacking in that growth, you're getting back in companies that are rock solid. They're probably paying dividends, and you're going to be getting probably a very solid total return over time.
All right, so your first pick is the safe bet. What
Right.
is your second ETF pick like?
Okay, so the second one is the Global X US Infrastructure Development ETF. The ticker symbol is PAVE, P-A-V-E. The focus of this ETF is, as the name implies, it's looking at US manufacturing companies that are involved in building up the infrastructure of the country. You'll recall that back in 2021, the US Infrastructure Act was signed into law. That was followed up by the CHIPS Act in 2022. And so all of that money is starting to flow into the economy. There's been some concern that infrastructure spending is going to slow as the incoming administration looks to maybe curb government spending a little bit. But most of the spending in the infrastructure bill is already committed contractually into 2026. So 2025 looks like a year when it's still going to be very good for infrastructure spending. And I think that's really what makes the bull case for the PAVE ETF in 2025.
Yeah, and this feels like it hits a number of different industries and companies that could be impacted by helping to build up infrastructure.
Right. You're looking at not just manufacturing companies, but you're looking at utility companies. You're looking at even probably some technology companies building out data centers in addition to things like roads and bridges and things like that.
So what kind of growth can investors expect from this ETF?
The fund's up over 26% in 2024, and that's in line with the return from the S&P 500. Again, considering that the money for a lot of these projects is contractually obligated through 2025, I think that investors should expect performance that's pretty much in line with the S&P 500 for next year, and it's expected to be a good year for the S&P 500.
Yeah, I think everyone's excited about this good
Yeah,
year ahead. There's a lot of ETFs you can pick with just a good year anticipated ahead that are going to see some success. But I'm excited to see your third pick and see if we have a little bit more of a growth ETF in our picks.
absolutely. So my last pick um, is the iShares Semiconductor ETF, and the ticker symbol is SOXX. That's SOXX. We're still in the early stages of AI, and I know that there's some investors that are kind of getting to the point of, well, maybe AI is a bubble and all this, but I really don't believe that. I think we're still in the very early stages of it. In fact, we're probably getting ready to pivot from what we would call AI 1.0 to maybe a 2.0, which is going to be focusing more on software and things. No matter where we are, though, we're going to need semiconductors. 2024 has been an uneven year, let's just say, for semiconductor stocks. Some have done well, some haven't done as well. But I think you could say all of them, even companies like NVIDIA and Advanced Micro Devices, the performance has been choppy. It's been up and down. That's expected to change in 2025. We're supposed to be seeing more significant growth and more consistent growth. The SOX ETF is a good way to play that. You don't have to worry about picking any one individual stock. It's a basket of stocks, and it's all focused on the chip sector.
Yeah, the chip sector, especially with the news that we might bring some of that chip manufacturing to the US,
Yes.
constant demand and growth in this industry. Does that make this a really high growth ETF? And how much growth are they expecting in 2025?
It's actually underperformed the S&P 500 this year. The growth in this fund's only been 11%, but that's consistent with what I was saying. It's been kind of an uneven year for chip stocks. I would expect next year, with chip stocks taking off, I would expect this fund to outperform the S&P 500, especially since stocks in this sector are supposed to be growing their earnings per share by 32% next year. Earnings growth is the biggest predictor of stock price growth. So I think right now you'd want to front run this growth, and that's why you want to get on the SOX ETF now.
Yeah, what's another potential benefit of choosing the ETF over individual semiconductor stocks out there? Is the price point of entry a little bit less using the ETF? Is it easier to get into some different pieces of these companies through the ETF style?
For a lot of investors, the best benefit of an ETF is it smooths out your risk tolerance. So instead of worrying about what NVIDIA might be doing, or AMD might be doing, or Qualcomm might be doing, or Micron might be doing for any one individual quarter, you're spreading your risk out. And over time, you're going to find that everything balances out, and you should be getting a return that's close to what the industry averages. Now, again, last year that was a little bit down compared to the S&P 500, but I believe next year you're going to see that outpace the S&P 500.
Awesome. Well, thank you so much for three great ETF picks for 2025. Always appreciate having you on the channel, Chris. And thank you for watching, everyone. You can find many more videos just like this one that share some great stock picks ahead for 2025. We hope you've had a great 2024 and happy investing in the new year.